there is a proposal for the U.S. government to start to hold Bitcoin. The U.S. government, like many countries, they hold reserves in a variety of different assets, gold, oil, rare minerals like palladium. And I think they have like maybe 27 different reserves. And so, many governments hold gold. I think they should start to hold Bitcoin because Bitcoin is essentially the new gold standard. It's, I think, a very core way that you should hold assets and hold value over time. And it's still nascent enough where it has some volatility. It's getting less and less over time, but it still has a lot of upside potential. So I think if the U.S. gets that legislation approved, which I hope they do, the rest of the G20 will follow, and that could be a huge driver of Bitcoin price appreciation.
U.S. President Donald Trump has kept a number of campaign promises aimed at promoting America's leadership in digital asset innovation and blockchain technology. One of his first orders of business as president was replacing the anti-crypto heads of regulatory agencies like the Securities and Exchange Commission with pro-crypto and pro-innovation Republican commissioners, who have, in turn, begun to make suitable changes to the previous administration's anti-crypto policies. After spending only a few days in office, the Trump administration has officially ended a contentious SEC guideline that prevented U.S. banks from custodying crypto assets. On Thursday, the administration's new leadership at the SEC, headed by Acting Chair Mark Uyeda, rescinded Staff Accounting Bulletin 121, which forced banks to identify crypto assets held on behalf of customers as liabilities, hence effectively preventing them from custodying cryptocurrencies. Several prominent crypto investors, including MicroStrategy Executive Chairman Michael Saylor, have celebrated the decision, hailing it as a welcome development for the advancement of the cryptocurrency industry in the United States. While speaking as part of a crypto and digital assets panel at the World Economic Forum's annual conference in Davos, Coinbase CEO Brian Armstrong and Skybridge Capital's Anthony Scaramucci discussed the importance of the administration's pro-crypto stance and how it could facilitate the industry's growth and development in and out of the United States. Armstrong opines that Trump will keep his campaign promise of establishing a U.S. strategic Bitcoin reserve, and other G7 countries will follow suit in no time. As we bring you clips from the discussion, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for the support, and enjoy the video.
So why Bitcoin reserve and not beef reserves and mutton reserves? Anyone wants to comment on that?
Well, I think that if you like Neil Ferguson is here, he has a great book on the ascent of money, and he's a historian, and so many things have been used as money over the years. I think it's pretty, this is still maybe a new idea, but I think it's clear at this point that Bitcoin is a better form of money than gold. It is provably scarce, just like gold, but it's more portable and divisible, so you can actually use it. Has higher utility, I would say. And it was the best performing asset of the last 10 years. And so for store of value, I think it's going to be important for governments to hold this over time. It might start with being 1% of their reserves, but I think over time it'll come to be equal to or greater than gold reserves. In terms of the state of the industry, I'd say that it's the dawn of a new day. Yeah. You have to remember that the last 4 years in the US, it was a very hostile environment. I think the lack of clarity got weaponized, and some people in the government tried to actually, I think, curtail or kill the industry unlawfully. And so with a new administration coming in, I think we have a path to get clear rules, and we're going to have hopefully legislation passed through Congress, which will bring in a lot of new investment. And so crypto is really in its infancy. I think it's incredibly exciting. I mean, the ETFs have it's broken almost every record of new ETFs of Bitcoin money flowing in. Payments with stablecoins are on a tear. They grew about 300% year over year. In 2024, they did about $30 trillion in payment volume with USDC as a major player there, for instance. And I'd say about half of the Fortune 500 has some sort of pilot going in crypto. I mean, the largest financial service firms in the world, every fintech, many of the neobanks are all integrating crypto. So this is a technology that's going to update the financial system globally, make it faster, cheaper, more efficient. And it's the long-term impact of this is that it's actually going to increase economic freedom in the world. If you want, we can come back to that topic. But to me, that's one of those important freedoms right up there with speech, which is foundational to all prosperity in society. And if we can actually inject good financial infrastructure to every country of the world for anybody who has a smartphone, plug them into the global economy. I think it's going to lift billions of people out of poverty, and it's going to be very transformational over the next couple decades. I think the Trump effect cannot be denied here. To have the leader of the largest GDP country in the world come out undeniably and say that he wants to be the first crypto president, he wants the industry to be built in America, that he's going to direct every agency of the US government to work towards clear rules which enable innovation. This is unprecedented. And it's hard to deny that effect has, we just yesterday saw an all-time high price for Bitcoin at 109,000. I think that's largely due to the inauguration.
I was there when President Trump gave this speech at the Bitcoin conference, and it was very, very clear if he won the election, things were going to change in the industry. And if you were on the side of the Democrats trying to support them, I was astonished at their reluctance to understand what was actually going on. And if somebody does write a history of this era, it'll be the era where Elizabeth Warren and Gary Gensler got together for some unknown reason. Some of us have some ideas about what they were doing, but they got together and they literally helped the Democrats lose the presidency, the House, and the Senate. And so it was very hard to communicate with them at that time what they were doing. But what I will say, and I have to respect Mr. President Trump for this industry is here to stay, and there are properties in this industry. There's companies like Circle, companies like Coinbase, Franklin Templeton, Stellar, that are going to advance the technological innovation in the world of transactions. They're going to speed them up, they're going to make them cheaper, and it's going to unleash an amazing amount of global innovation. And you got to give the president and his team credit for understanding it. And I also think we have put pressure on the Democrats now. The Sherrod Brown race in the United States set alarm bells off. And so for the Europeans in the room, Sherrod Brown was an 18-year veteran of the Senate. He was the head of the Senate Banking Committee. The crypto community, through the Political Action Committee, dumped $40 million into that race, knocked him into the woods. And that's very hard to do, to dislodge an incumbent with that level of power. And I think it sends a message to the Democrats as well that they need to be bipartisan with this. So I am very hopeful and very pragmatically optimistic.
True to enhancing technological innovation in the United States, particularly in the crypto and digital asset space, President Trump issued an executive order on Thursday. The executive order outlines several key priorities. It affirms a dedication to advancing blockchain technology and ensuring open public networks operate freely without undue interference. It explicitly opposes censorship and affirms the rights of individuals to access and use digital assets, aligning with a broader vision of promoting financial autonomy. A cornerstone of the order is the prohibition of CBDCs within the United States. The administration argues that CBDCs pose risks to financial stability, individual privacy, and national sovereignty. Federal agencies are directed to cease all ongoing and future CBDC-related initiatives, signaling a decisive shift in policy. Additionally, the order repeals previous policies, including Executive Order 14067 from 2022 and the Treasury Department's Digital Asset Engagement Framework. By rescinding these measures, the administration aims to eliminate what it perceives as conflicting or outdated approaches to digital assets. The order mandates that federal agencies reevaluate existing regulations and propose updates within 60 days, ensuring alignment with the administration's current objectives. The directive not only positions the U.S. as a champion of blockchain innovation, but also underscores its commitment to protecting financial independence and individual privacy in the evolving digital age. During an interview with the Wall Street Journal at Davos, Armstrong speaks at length about crypto regulations and his expectations for the Donald Trump administration in righting the many wrongs of the previous administration. Here are clips from the interview.
Yeah, I just came from DC yesterday, and the energy was palpable, as you can imagine. We co-sponsored the crypto ball there, and it was just an incredible event, tons of energy. It felt like the boot had been lifted off our throat in a way, right? Like the last 4 years, the lack of clear rules, I think, was really weaponized by Gary Gensler and some folks in the administration. And it felt like, we repeatedly petitioned them for clear rules, like people wanted to build companies, and it was all getting pushed offshore because they were really kind of unlawfully attacking the industry, trying to kill it, in my view. And so it was a ton of energy and enthusiasm about this new direction, like, you know, a new SEC chair that's pro-crypto, you know, people like David Sachs as the crypto czar, all, you know, throughout the new administration. And so we're going to keep pushing and try to get some clear legislation passed. That's our next big goal in this administration, to actually codify it in law so that it's permanent. It's not something that could flip back and forth like a political football every few years. I think we do have an opportunity here in the next 6 months to try to really get some legislation going. You know, for those of you who follow U.S. politics, in the House of Representatives, we got a bill passed last year. When I say we, I mean the crypto industry, you know, the government itself, like everybody working together. Now, once something becomes sufficiently decentralized, I think it can become a commodity. And, you know, the reason is that there's no, like Bitcoin, for instance, there's no central group that is in control, and you don't have this information asymmetry between the people using it and the people building it. It's truly decentralized. So I think there could actually be a decentralization test that would allow something to be a commodity and not a security. And there could be different prongs to that test. And then artwork, you know, would be another category. Stablecoins would be another category. So these are the core components of a bill. Yeah, well, crypto is going to be many different things. So, you know, Bitcoin is the new gold standard. It's a refuge from inflation. It's a core primitive in this new financial system. And stablecoins are making payments faster and cheaper, more global. Now, meme coins is another, just one of many areas. You know, there's NFTs and ICOs. Like every few years, there's something really interesting happening in crypto. And it's hard for me to, I agree, I don't think all of it is very serious, nor does it have to be, right? Things that are more like artwork or collectibles, like baseball cards or things like that, I think that's fine if people want to put out art and have people collect it. I don't have any issue with that. And the other thing I would just say is, like, we always have to be a little cautious about judging, you know, like a lot of innovation comes from play and experimentation. If you look at the early things people were building on the internet, it didn't look very serious. You know, it was like animated GIFs and cat photos and silly things. And now 20% of all GDP is running on the internet of e-commerce, right? So I think that, you know, memes are actually kind of interesting. Like, they seem to be a very condensed form of information that can go viral, and messaging spreads through memes. It's a way for people to poke fun at authority or ideas whose time has come. And so I don't know exactly what will happen with meme coins. I'm not like, I don't personally trade them, but I don't want to discount it too early if there's something, you know, that's percolating.
I mean, one difference obviously between meme coins and fun things on the internet in the past is you couldn't lose a lot of money on fun things on the internet in the past. But you can on meme coins.
You might remember, you know, a lot of people got emails about the Nigerian princes, and, you know, there was a lot of fraud happening early internet as well, as people learned and adapted to things. But look, I don't want to minimize the issue. I think there are a lot of consumers that have been hurt in crypto. You know, FTX blew up. There's been, you know, ICOs that were scammy. So these things are something we're trying to really, you know, correct. And the way you do it, I think, is by getting clear regulation. And that has to come from Congress. Clearly, the agencies are not really, they don't have the motive to kind of publish clear rules on their own, and we want it to be in law, and then the regulators can go enforce the law. So I think Coinbase has tried to be a good actor to help clean up the industry, to do reasonable things even in the absence of clarity that we think might be or should be required later. But yeah, you're right, the industry's had some bad actors, and we're trying to fix that.
The repeal of SAB 121, combined with President Trump's recent executive order prioritizing digital asset innovation, has created a pivotal moment for the cryptocurrency industry. With the restrictions and accounting guidance of SAB 121 no longer in effect, banks and traditional financial institutions now have the green light to fully embrace crypto services. This regulatory shift eliminates key barriers that have previously hindered widespread institutional participation in the crypto market. The inclusion of crypto services like custody, trading, and payment solutions by established financial entities signals a monumental step toward mainstream adoption. By providing secure and regulated access to digital assets, banks will significantly lower the entry barriers for retail and institutional investors alike. Many potential participants who were previously deterred by the complexities and perceived risks of decentralized platforms can now engage with crypto through trusted and familiar banking channels. This newfound accessibility is likely to result in a substantial influx of individuals and capital into cryptocurrency markets. Institutional investors, who require regulatory certainty and robust custodial solutions, can now confidently allocate resources to digital assets, bringing increased liquidity and stability. Retail investors, too, will benefit from streamlined access to crypto via banking apps and financial products, driving broader public adoption. By allowing financial institutions to integrate cryptocurrencies into their services, the repeal of SAB 121 ensures that the U.S. financial sector is better positioned to compete in the global digital economy. This regulatory clarity also aligns with the broader goal of fostering innovation, enhancing financial inclusion, and reinforcing the United States' leadership in the rapidly evolving crypto space. Do you think a strategic Bitcoin reserve is next on President Trump's list of pro-crypto policies? How do you think such a move will impact Bitcoin and crypto asset prices going forward? Please share your thoughts and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos. Every action helps with the YouTube algorithm and contributes to the channel's growth. Thanks for watching.